activity that's happening day in and day out in your business, and to bring it together in an organized manner that you can look at and read and make educated decisions for your business. We're going to talk about some of those decisions tonight, and how do we look at this and go through a process to make decisions. So speaking of that process, we call this the CEO decision loop. And all of you are CEOs of your businesses, right? Chief executive officers of your business. And there's this thing called the decision loop. This is what we use when we're looking at financial statements, okay? So every strong decision follows the exact same pattern. Every single decision. So you get those financial statements, and this is what you're going to do. You have your data, okay? Your profit and loss and your balance sheet. From your data, you're going to gather an insight. You're going to pull information. You're going to see that information. You're going to look at trends. You're going to look at numbers. You're going to look at ratios. So you pull insight. From that insight, it tells you what's not working in your business. Very clearly tells you exactly where you need to focus your efforts. And then you make an adjustment. Then you evaluate the results and you do it again. So you take your data, you pull your insight out of that data, you make an adjustment in your business, and then you evaluate it and you do it over and over and over. A lot of people, a lot of sellers come on Whatnot and they go to all the talk shows and they're like, I'm not making enough money. How do I make more money? How do I price my items? How much do what should my cost of goods be? How do I do this? And a lot of those questions, 99% of those questions could be answered by looking at your financial information, looking at that insight and making adjustments for your business. So your data shows you what happened, your insight explains why it happened, and then your adjustment changes what happens next. So our data gathers it, our insight explains what's going on, what's wrong or what's working well too. It's not always what's wrong. We can identify what's working well. And now what do we need to change? What happens next? And sometimes if it's working well, we're like, we don't have to change anything. We need to keep doing what we're doing. Other times it's like, oh, this isn't good. I need to change something. So that is a secret formula right there. That data, insight, adjustment, evaluate. That's a whole secret formula that many, many resellers don't have the grasp of. So you guys, the 20 of you that are here are just far ahead even in knowing that formula and looking at your financial statements. So we're going to walk through some examples because tonight is all about how do I make those decisions? Okay, I got this information. How do I make the decisions? So let's go to our first example. If you have the book, we are looking at the book. I'm going to run right through these examples. I wrote a few notes here to talk about, but I'm going to give you all the information too. So let's think about this. A seller reviews their profit and loss, and they notice two things about their profit and loss. They notice that they have very strong revenue, good money coming in, but they have a very, very thin gross profit. So remember, gross profit is revenue minus your cost of goods. So we know that we're thinking about two things. We're thinking about the money that's coming in and the money we spent for that inventory that we sold. So they have strong revenue, but very, very thin profit, gross profit. That's your data, right? Your data is that P&L. Your insight is knowing, okay, my revenue is strong, but my gross profit is thin. What is that telling me? What does that mean? In this case, the issue isn't volume, it's not sales. The issue is margin. I have a very thin margin. That means after I get all that money in and I account for all the inventory I sold, there's not much left to cover all the rest of the expenses. Now we go to adjustment. What do we do with this information? Now that we know that, it's pinpointed the problem, what do we do with this information? We have a couple of choices here. This is our adjustment phase of that process. We can raise our prices a little bit, right? If we raise our prices, that's going to give us a little more gross net margin, our gross profit margin. We can maybe, if we're doing a lot of dollar starts, we can do less dollar starts. Or maybe we can bundle low value items to create higher value. All of those things can help us fix our margin. The other things we can do, maybe control our cost of goods. Maybe we can source better. So looking at our numbers allows us to pinpoint exactly what's wrong and then come up with ways to fix that. So again, we're going to go back over that example one more time. So a seller reviews their profit and loss. They have very strong revenue, good income coming in. So I'm not so sure it's an income problem, but very thin gross profit. That tells me there's either not enough coming in or I'm spending too much on my cost of goods. So it's the margin. I need to fix my margin. Here's a little secret, you guys. Any problem in accounting, any problem you have, and I'm saying any problem in accounting, boils down to two real fixes. Bring more money in, spend less going out. One of those two things. So when we look at when your gross margin is really thin, we can either bring more money in or we can spend less for our cost of goods. That's our adjustment. Right? Let's look at another example using a different type, a different view here. So another example is choosing categories based on numbers. And when I say categories, I mean like what you're selling. Let's say that you sell two different revenue streams. In this case, we're going to use jewelry and we're going to use some type of home decor. You're a seller, you sell both of these items, right? You're tracking all of your numbers. So a seller compares the jewelry. When you're looking at your numbers for jewelry, high margin. Okay, so far great. High margin, but lower volume. That actually doesn't sound too bad, right? It means I'm selling less, but on the less amount that I'm selling, I'm making a lot of money because I got really high margin. However, when they look at their decor, high volume, selling a lot of it, but lower margin. So it's the opposite problem. It's I'm selling a lot, but each piece isn't bringing in as much money. That's our data and our insight. Our data is the numbers that's telling us this. Our insight is, okay, jewelry is high margin, low volume. Decor is high volume, low margin. What do I want to do here? What's my CEO move to tackle this problem, right? I want high margin on everything I'm doing as much as possible. I want to maximize where it's working right. And in here, we know jewelry is working really good, but maybe I don't want to give up home decor. Maybe home decor, it's a lower margin, but it didn't say it's not profitable. So what are some of my options here? I can keep my decor for traffic. I can keep doing the decor to help bring people in, right? That helps with the algorithm. Remember, the decor was high volume. What's one of the questions everybody always asks on Whatnot? How do I get more people in my room? How do I get up on the algorithm, right? So if your decor, if one of your category lines is high volume, that means there's a lot of activity happening. There's a lot of swiping going on. That's good for the algorithm. That ultimately leads to your exposure, okay? So we can keep the decor for the traffic, for the algorithm marks, but maybe we can use the jewelry to really build our profit. So maybe we add in a couple more jewelry shows since that's our higher profit earner. But how about if we start to schedule shows intentionally? Maybe we do 2 or 3. Maybe we'll do a show back to back. We'll do a decor on one day, a jewelry on the next, a decor, because the decor is bringing us up, getting us recognized, and the jewelry is bringing in the money. So I really want to drive this home. This is a perfect example of how you can look at your financial statements and identify, we have a high margin here, a low volume item in jewelry. I know that because of my numbers. But look at what my result is in this. My result isn't change my prices, change my shipping. My result is I've identified what's happening. I want to know how to fix this to even this out a bit. I'm going to adjust my show schedules. That's the result. So you take financial information to pinpoint something happening in your business that maybe the change isn't financial at all. This is the beauty of looking at your profit and loss in your balance sheet. It gives you insight that you can actually use that filters to all the other parts of your business. It's like your financials have these fingers that touch everything else and affect everything else. And all you have to do is to understand how to read it in order to know where to pinpoint to fix any problems. It is really just a drastic change in your business when you can start looking at that and you start pinpointing in exactly the areas that you need to focus on and fix and what's working well. Let's go to another example of a completely different example to help kind of drive this in. And I didn't say this earlier, guys, but feel free if you have questions, if you want to ask anything, put it in the chat. Even if it's a little off topic, I'm totally okay with that. 100% open to questions. This time, let's look at an example of using your cash flow to time sourcing. So I'm going to look at my cash flow. Cash flow is one of the chapters we went over a few weeks ago. So imagine a seller's cash flow. If you weren't hearing that when we did cash flow is the movement of money in and out of your business and the timing of when that money comes in and out. So let me just kind of really quick, I'm going to back up for a second and give you a perfect example of cash flow coming into your business. You do a show on Saturday. If you've reached, I'm going to assume you've reached your 1,000 sales. You do a show on Saturday. Everything needs to be shipped by Tuesday. By Tuesday morning, you have it all shipped. You drop it off at the post office. Now Whatnot says, hey, you've shipped all of this stuff. You can pull your money out of Whatnot and put it in your bank. So you go in there and you say, do the little withdrawal. That's on Tuesday. Sometimes a bank can take 2 or 3 days. So you'll probably get your money on Thursday in your bank. You did a show on Saturday, the money comes in on Thursday. That's timing of cash flow. You created the money, you earned the money on Saturday, the money actually comes to you on Thursday, but you have a few days of time in between. Well, then we also look at when the money is going out. When is it leaving our business? I don't know about you all, but if I do a show Saturday morning, the next thing I like to do is to, get everything ready and head on out and do some sourcing Saturday afternoon. Well, now I've earned money, but I don't have it, and I'm spending money Saturday afternoon, but I'm not going to actually get more money until Thursday. That's timing, understanding when everything is happening, when the money's coming in and when the money's going out. You have total control over when money comes into your bank, 100% total control over that money. How? How do you have control over that? Because you can schedule your shows. If I schedule a show for Saturday, like I just explained, I can probably expect to have that money on Thursday. So now if I schedule a show for Monday, I can expect the money on Saturday or the following Monday. I schedule a show for Wednesday, I can have it 2 days later. So I schedule my shows strategically through the week so that I have continual cash flow coming into my bank. You all have that same opportunity to schedule your shows in a way that it creates a cash flow for you. Also think about it like this when we talk about cash flow. If you know that at the first of the month, you have your Canva, your Vendu, and all these other subscriptions, your Spotify that is going to be pulled out of your business bank account, maybe you're doing an extra show or two towards the end of the month to pad that bank account a little bit, knowing you're going to have a lot of expenses hitting on the first of the month. That's all cash flow and timing. It's no different than you managing your own personal money. Okay, so let's look at an example on how to use your financial information to read the cash flow and to time your sourcing appropriately. So a seller's cash flow shows heavy sourcing early in the month. So this seller does a lot of their sourcing first at the very beginning of the month, but a lot of their payouts don't arrive until later. That's their data and their insight, right? Their data is they know when they do their sourcing and they know when their payouts come. The insight is they don't match up at the same time. My sourcing comes first after my payouts. So as a CEO, what can you do? What's your CEO move? You can delay large purchases, right? You can schedule sourcing until after the payouts. So you are in charge of when you want to have all of these things happen. You can maintain a cash buffer, like I talked about, maintaining extra money at the end of the month to cover beginning of the month expenses. So by looking at your profit and loss, looking at the timing, you're able then to plan better in your business for when you need the money and when those expenses are occurring. What does that avoid? Why do you want to do that? Do a no buy money so the next month you are sourcing with. There you go. Perfect, Crystal. I love that idea. So you don't buy for a month. You have enough inventory, get you buy for a month. You pad it. You get that good cushion going. And then you use that money for next month. And now you're like a month ahead always. Love that idea. What does this result in for you? This helps you not to spend, no panic spending. When you understand your cash flow, you understand your profit and loss statements, you're not panic spending. You're not rushing out and just grabbing stuff. You're doing it in a controlled, structured, logical way. And you're more confident in it. You know, look, I'm spending money that I've made. I have it in my bank. It's okay to spend. It's not like I'm spending money and then wondering, oh, shoot, what bill's going to hit next week, right? Let's look at another example. Then we're going to do some exercises together. So let's see. The next example is using inventory data to stop overbuying. Uh-oh, did I say don't buy as a reseller? That's our favorite thing to do, right? But sometimes it's not the right move. Let's just picture this. Your inventory report shows slow-moving categories are stacking up. What does that mean? Let's go back to your jewelry and the home decor seller. You do both things. Maybe you've got a lot of home decor inventory, and it's not moving very fast. You got shelf fulls upon shelf fulls in your storage area. but your jewelry is moving pretty good. So my slower category, my decor, is backing up. It's sitting there. What do I need to do about that? Because that's affecting my financials. That's affecting everything else in my business, right? That was my insight. My insight that is that it's not moving. That's money just sitting tied up on the shelf. Money that's not converting to cash for me that I can use in my business. So maybe we want to pause sourcing, just like Crystal said. Maybe we do a no buy for a little while because we have enough inventory. So we pause sourcing. Or maybe we say, okay, look, if I got too much of this home decor, I need to do something to move it out. I need to bundle it or maybe discount strategically, put stuff on flash sale in the bin, maybe do lower starts in a show to get some items moving so that I can then reallocate that cash. That's cash sitting on your shelf. Inventory is nothing but cash sitting on your shelf, not making you money until you sell it. So we don't want slow moving items stacking up on us. We want to keep those moving. Now, you can say, Tracy, I can see if I have stuff not moving just by looking at it on my shelves. You can. Totally don't argue with that. You can absolutely see that. But can you tell me the exact value of it by looking at your shelves? Your balance sheet, it is cash just sitting on the shelf. Your balance sheet is going to tell you you have X number of dollars. That makes it a little more real. I can look at a shelf and see a bunch of stuff, or I can look at my balance sheet and see you have $2,000 sitting there. That hurts. That hurt too. Knowing it's $2,000 hurts a little more than just seeing it sitting there because we get used to seeing it sitting there. It's like clutter on your kitchen counter. You might not like it, but you're like, oh, it's the mail. I'll get to it tomorrow. Yeah, I'll get to it. After a while, you just become used to it and you don't even see it anymore. That's what your inventory can end up like. But then when you look at your financials and that dollar amount hits you in the face, it makes it all that much more real and you need to do something about it. So what's the result of this decision? Because we talked about we have our data, our insight, then we have an action, then we evaluate it, and we go back to the beginning again. We've cleared space. We have free up cash by getting rid of that inventory. And our focus is back restored on moving everything appropriately in the way that it should be through our normal sales. Let's go on and do some exercises. This is where we actually practice. Now that I've explained the concept, we actually practice some of this. So it's going to take you guys putting some stuff there in the chat. And welcome in if you're just joining. We are doing Ledger to Leadership. We are on week 10. This is an accounting course. Tonight we're talking about using your financials, your profit and loss, and your balance sheet to make really good decisions. So let's do our very first exercise. We're going to pretend that we're looking at a profit and loss statement. On this profit and loss, there is revenue of $6,000, cost of goods of $3,600. Okay? Your gross margin is 40%. All right, so we're making, after the money coming in, after we paid our inventory, we account for our inventory, we're making about 40% of that money. So 4 out of every $100, 40 out of every $100 we get to keep. Okay. Is that margin, is a 40% margin sustainable? That's kind of a, it depends question. But knowing your category, and you don't have to say what it is, but I'm in vintage, I do mainly vintage decor. 40% isn't that bad. I would like it higher, but 40% is probably at the low level of what I may accept. Is 40% good, a good margin before any other expenses for your categories? If you looked at your profit and loss and you saw you're making a gross margin of 40%, would you be happy? Maybe, maybe not. I would be low key. Like that would be the bottom line. That would be like, it's okay, but I think I'd like to improve it a bit. So Natasha's like, no, I need more than that. So now that we know what our gross margin is, we ask ourselves, how can I improve this by 5%? That's my action item. What can I do to improve this by 5%? How can I improve my gross margin? I would be okay for now, but exactly. That's how I feel, Crystal. I feel like it's not terrible, but it's not really where I would want to be, right? So now that we know what the issue is, we have our data, we have our insight, now we need to determine that adjustment, that action that we're going to take. So we have 3 actions that we can take. We could, and remember, with any money thing, We either have more coming in or less going out. That's the solution to everything. But how would it apply in this situation? We could adjust our pricing. So if I want a higher gross margin, I can make my prices go, hello, the polish picker. We can make our prices higher. That's maybe a solution. Okay. Maybe it's a good or bad one. How would your customers feel if you all of a sudden jacked up your prices? Would you lose sales? Would it really have the effect you want? Or would the loss of sales negate the price increase, right? We can improve our sourcing and lower our cost of goods. Less money going out. That would improve our gross margin. Or maybe we can change the product mix of what we're selling based on, maybe we have some other products that have a little bit higher margin, that we can switch out some of our products. Raising price here can reduce and lower sales. Absolutely. So we have 3 decision options we can do. Either adjust the pricing, improve our sourcing, or change our product mix. Now, as a CEO, our decision comes down to, okay, I have 3 options on how to fix this. And what we're trying to fix is to have a 5% increase in our gross margin. Now I need to weigh each of those options and make the decision I think is best. I live with it for a little while, maybe do a month of shows, and I go back and reevaluate. And I may come right back to this exact same problem and say, okay, my first solution didn't work. Maybe adjusting pricing didn't work. Let's try improving my sourcing. So this is how you actually start making more money in your business. Okay. So this is the second part after you understand how to sell properly, how to present items. This is now how do you interpret that data that's coming in and fix anything that may be going haywire. Maybe also look at what you're sourcing. Spend the same amount. Maybe you're going to get less items, but they're better items that you can sell for more money. Perfect example. So it's improving your sourcing in some manner. Absolutely. Again, every solution is going to come down to some combination of more money coming in or less money going out. Let's look at another scenario. This one is a cash flow decision. All right. And this may hit home for a few of you. You have $1,200 in your business bank account. That's it. Right now pretend you have $1,200 in your business bank account. In 10 days, you expect to get another $2,000. You're like, hey, I just got to hang out 10 more days and I have $2,000 coming in 10 days. But you just got a phone call of one of a tremendous sourcing opportunity, but that sourcing opportunity is going to cost you $1,500. You only have $1,200 in your bank. You have your data and your insight. You have 2 options. Buy now or wait. What option do you take? Do you take advantage of this great sourcing opportunity? Remember, you're $300 short. The sourcing opportunity is $1,500 and you only have $1,200. You're not getting any more money for 10 days. What would you do? Do you buy it or do you wait? What would you do? Cream City Rollers, they're going for it. They're going to buy it. And there isn't a right or wrong answer here because every business owner has to figure out their own answer here. We're going to go over the pros and cons of both answers. Look at there. My husband's like, credit is the $2,000 income that is generated, depends on what it is. $2,000 is already generated. It's just a matter of timing. It's just, you're not going to get it for 10 more days. It's guaranteed, but you're not going to get it for 10 more days. You have 1 month until the bill shows up. Logically, see, and this is it. This is where we start to get some emotion coming in there. Logically, we know, hey, if I don't got the money in the bank, maybe I shouldn't buy it. But it's really tempting if it's a really good deal, right? These are common scenarios that we come across as resellers probably pretty frequently, okay? So buy now or wait. Let's talk about pros and cons of each because that's our only decision. And each one of them carries risk in itself. So if I buy now, I'm probably going to incur some debt. I'm probably going to have to use a little bit of a credit card to cover that shortfall in cash, and I'm going to drain my bank account. If it's a really good product and I have enough to cover all other upcoming bills, I would go for it. Crystal, you just hit on the next con of this. If I take all that $1,200 in cash, I don't have anything left to pay anything else. What if more bills come in before I have before that $2,000 comes in. Or maybe you'll say, oh, I'm only going to take half of my cash and put the other half on credit. Well, now there's some of that 2,000, you're already spending money of that 2,000 before you even get it. So there's some cons to that, right? Now the pros, if you were to buy now, you've just got a really great deal. You can sell some more stuff, generate some more money. You know, all of us, we really all get caught up on, oh, I can flip that and make money. That's such a reseller, like we're like, oh yeah, let's do it, right? And you see now, Crystal is a bookkeeper accountant, so she would have already have this all planned out. And this is where it goes back to a lesson we did a few weeks ago of taking a calendar and actually writing when you get money in and when it goes out, so you can start to see all of this in real live format where you're like, oh wow, this really makes sense, when I can actually see the days of money is coming in and the days of money goes out. What if we decided to wait? What are the pros and cons if we decided to wait? Because we're looking at our balance sheet, we're looking at, look, I only have $1,200. I know this money isn't coming in. If you buy now, you can sell it fast and whatnot and have the income to pay the credit card bill when it comes in. You just have to hustle. You do. But are you maybe causing yourself some pressure and some stress? So if I buy now, does that put me in a spot where I feel pressure now to make money? I could miss a killer deal. That could be a con of that. If I wait, I could totally miss a killer deal. But if I buy, could I generate stress for myself and maybe I get this inventory, but now I feel pressured because I'm in debt and I'll sell the inventory cheaper than had I had a cash cushion there? Maybe. You know, there's no right or wrong answer, but you have to understand that all of these financial decisions come with an unwritten decision on the mental load and the stress it may cause you too. I don't always want him to be hustling to pay off debt. For me personally, in my business, I don't want to have to hustle to make up for money I already spent. If your network is strong, deals will come again. There you go. That's where my thinking is. No, because if I love it enough to pay with credit, I will be excited to show it. You would, absolutely. We don't want to miss killer deals. Maybe you can buy half. Yeah, maybe that's a solution. Maybe you can talk to this person. Hey, I only have half. Could you take half this money? And then maybe, hey, I can give you a little bit extra. I could pay you a little bit higher premium if you can hold it for 10 days. So maybe you're just buying yourself some time for it. There's a lot of different options, but the whole point of this one is understanding, being able to look at your balance sheet, know exactly what money you have on hand, looking at your cash flow, knowing when your money's coming and going, and to be able to make a very logical decision and to think through how that decision is going to affect every other financial part of your business and how it's going to affect you as a seller emotionally. And your emotions, then, if you feel stressed, if you feel pressure to bring in money, then you'll also feel pressure to discount things or sell things faster. So a lot of that depends on your personality and your risk level. So that's a pretty common one. I think we've all kind of experienced something similar to that in one way, shape, or form. Particularly starting out, if you don't have a cash cushion, it's always kind of like, oh, you know, do I rob Peter to pay Paul, or do I save it? You know, that's a very logical. It does really make you think on what you would do. All right, let's look at another one. This goes back to an inventory decision. So let's say we are looking at our balance sheet that shows our assets. Inventory is an asset, and we see we have $7,500 of inventory. $7,500 of our cash is sitting in items on shelves waiting to be sold. Of that $7,500, $3,000 of it has been sitting there for months. Very, very slow moving inventory. That's 40% of our inventory is slow movers. What does that look like on Whatnot? That means 60% of your inventory, you're turning over quickly. You're putting on a show, it's selling like hotcakes. 40% of it is sitting there. Maybe it's listed on other sites, those sites that are static, and you have to wait for the perfect buyer to come along. 75. You're giving me a hard time in there, chat. So what do our question here, we have our insight, we have our data. $7,500 of inventory, 3,000 of it is slow moving. 40% of it's sitting on the shelves moving super slow. Should I be buying more? Does buying more help at this point? How can I improve my cash flow? How can I turn that inventory into money. What action would improve that the most? Reduce the price or bundle? I love that. Absolutely. Sell it. Start bundling that stuff together, make it more incentivize people more to buy it, maybe offer a coupon, do it at a slightly discounted rate, one you're still making money with, but that you're getting that inventory flowing. Do more shows, so add another show on and really focus on ways you can make that inventory get sold, the slow moving inventory. Maybe mixing in the slow stuff with the faster going stuff to help try to bundle it together. 3 for $10. Yep. So this is looking at your inventory, understanding your numbers, different days and times. Exactly. So you guys you're hitting the nail on the head here. So we are looking at numbers. We're looking at our balance sheet and we see $7,500 of inventory on there and we're able to identify 3,000 of that as slow moving. Okay, that financial data now requires an action on our part. That spurs me. To me, looking at it that way spurs me to do something faster than walking into my storage area and looking at my shelves of inventory. And I'm like, oh yeah, that's listed on eBay. Oh yeah, that's listed on Etsy. That'll sell. Really? But in my head, I'm not thinking all of those listed on eBay, listed on Etsy are $3,000. That's a lot of my money sitting on that shelf. But looking at it in black and white in a financial statement is like, oh, I better do something, right? And I'm not saying Etsy and eBay is bad. I'm just using slow moving inventory as an example. For me, the stuff that moves the slowest for me is always the stuff I list on those types of sites. So again, taking financial information, using it to spur an action. What is that action? That action had nothing to do with spending money or like bringing money in. It had to do with how am I going to mix and move the inventory? So using your financial data for true actionable stuff that you can take in your business. One of the little statements we have in the book, it says, when decisions feel heavy, check the numbers. Emotion fades when clarity appears. Take your emotion out of that. We may look at that $3,000 of slow inventory and say, oh, but that was all of grandma's stuff and I can't let it go really cheap. But is it serving you any purpose sitting on your shelf? Right? So we got to take the emotion out of it and look at it in black and white numbers. Almost half of that inventory in this instance was not doing anything, just sitting there. It's not paying rent. Exactly. It ain't paying you any rent to sit there. All right. So that brings us to, that's kind of the end of using your financial information to make decisions. We just touched on a few high-level ones that are highly relevant to us as resellers. And if you have the book or the PDF, what we've included in here, it looks like this. I'll hold it up in case, let's see if I can get it in the camera, in case you want to take a little screenshot. This is a monthly decision preview. Hold it up. There we go. Monthly decision preview. So if you have this, you can take a little screenshot there, or if you have the book. What we're doing here is this gives you a way to actually go through and review your numbers and apply some of this logic and this thinking to your actual numbers. So in section 1, you're going to put your revenue, your gross margin, your net profit, how much cash you have, how much inventory you have. Now you have some key numbers to start digging in and making some decisions with, right? And you're going to evaluate. Did I have good, strong category performance? Did I have healthy margins? Did I have consistent payouts? Did I control my expenses? So what are we doing here? We're following the data. Then I'm going to get some insight from that. And I'm going to ask myself, what felt heavy? Was cash timing okay? Was my inventory building up? Do I have thin margins? Are my expenses starting to creep in or creep up where they shouldn't be? So I'm really just taking a step back. I'm not like dissecting numbers here. I'm not doing math and a ton of formulas. I'm looking at this as a whole, the financial performance, the health of my company, and where there may be these slow leaks. If you're doing this on a monthly basis, taking looks like this on a monthly basis, you're going to catch those slow leaks before they become massive floods, massive financial floods down the road. This is what good business owners do. They're catching and plugging those leaks before they turn into something major. And they do it by taking a step back. They're getting themselves out of the weeds and they're looking down at the trees in the forest from a high level and saying, what do I need to arrange? What do I need to fix? The next part of that worksheet, I'll hold it up for you guys to take a look. Let's see if I can get it in here. I don't know how clear that is. So the next part of that worksheet, which way do I need to go with it? My camera's like tilted funky. Or try to get it in there. It looks like this. I'm going to talk through it real quick. All right. My husband's giving me hand signals. Put it up, turn it around, turn it left, right. All right. That's good. So we're going to talk about a decision filter then. So after we figure it out, I actually have included in here, and I'm going to go through with you a decision tree. I have made it as simple as possible for you to take your numbers and go down and say, does this apply? Yes or no? If it's yes, do this. If it's no, do this. We're going to talk through that decision tree. It's the same thinking that I use as a CPA when I'm looking at my numbers. I just don't have it written down. I've just done it over and over enough where it's in my head. But now we've wrote it out for you to actually start to have that same type of mental gymnastics every single month. But before we get there, we're going to use that tree and we're going to figure out what needs fixing. Is there anything in my business this month that I need to focus on? Is it cash flow? Is it margins? Is it expenses? Is it inventory? Those are our 4 big ones that we're really looking at. And then I'm going to figure out my plan. I've got my data, I got my insight. Okay, now I'm going to figure out what my action is to fix whatever I've identified, right? Now I'm going to do what needs to be done. Let's talk about that decision tree. I'm going to hold it up for you so you can hopefully see that. So this is the decision tree that's there. It's actually really, really easy to follow. I'm going to walk through it with you. So you have your profit and loss, you have your balance sheet. First thing you're going to do, step 1, you're going to say, is cash tight right now? Do you have enough cash in the bank? Do you have a cushion, or is cash tight? That's an easy yes or no. You're going to look at your balance sheet, look at your cash balance. Is cash tight? If it's yes, if you answer yes to that, then you're going to consider a few actions. Here's some actions you might consider. Delay sourcing. Increase show frequency temporarily to increase your cash. Clear slow-moving inventory to bring in the cash. Trade that inventory in for cash. Reduce your discretionary expenses. Okay, right now we're not talking pricing. We're talking about instant actions you can take if your cash is tight. If your cash isn't tight, you're good. Let's move on to number 2. If your cash isn't tight, you don't need to worry about cash. Number 2 is your gross profit healthy? So again, these are the same type of things that I think about every single month in my business. Is your gross profit healthy? Gross margin feels strong. I feel good about my gross margin. Remember we did that example, then it was 40%. If 40% is strong to you, the answer is, hey, it's strong. All right, I don't have a gross profit issue. I can move on. But if it's not, if you're like, no, my gross profit really is a lot lower than where I need it to be. All right, if it's lower, here's some solutions. Raise prices slightly. Quit doing as many dollar starts or low starts. Improve sourcing discipline. Change the sourcing. So we're controlling either what's coming in or what's going out. Change up your product mixture. Maybe you need to sell more lower end, a higher volume of lower end products if you don't have the buyers for higher end. So you need to look at what's happening and how do I change the mixture of the items that I'm selling. Okay. But if your gross profit is strong, if that's not something you need to focus on, we go to the next one. Are your expenses creeping up? Is there expense creep? Is all of a sudden all those other expenses, not cost of goods, but all those other expenses, software, shipping supplies, administrative supplies, paper, labels, all that stuff, are those starting to creep up for some reason? Is there some change in what you're spending? If the answer is yes, consider reviewing all of those subscriptions. Is there one that the price went up that you didn't expect? Are you paying for something that you thought was free and now all of a sudden it's not free anymore? So where are we? It's taking stock of where your expenses are. Optimize your shipping strategy. Maybe you're offering a drastically reduced shipping and your margins aren't covering that. Maybe you need to back off of that a bit and increase some of your shipping to improve what's happening in your expenses. Maybe you need to cut convenience cost. That's a hard one, but a lot of us pay for convenience in our business. I pay for convenience. I use AI. I pay for multiple AI services to do jobs for me because I don't have the time. It's a convenience. It's no different than paying in your personal life for somebody to cut your grass because you don't have the time to cut it. We do the same thing in business. So maybe I need to reduce some of my convenience cost in my business if my expenses are creeping up. I need to get control over what's going out. If that's not an issue, if the expenses aren't it, You're good. Let's move on and look at the next thing that may be causing an issue in your business. Is inventory turning over constantly? This is the one we keep talking about. Do you have money just sitting on your shelf in your inventory? If the answer is yes, so is inventory turning over constantly? So is it moving fast? So that's what we're asking. It's kind of the opposite of what we're looking at before. If your inventory is moving fast, you don't have it piling up, you're great, we're going to move on. If the answer is no, if you're like, no, I have inventory piling up, I have slow moving stuff that's sitting there not going anywhere, maybe we need to pause our spending on those type of items, bundle, discount, reallocate our cash intentionally, quit buying those items, move our cash around to different areas, right? After all of that, we get to our final check. Is this emotional or numerical? We always have to check ourselves. If this is emotional, if there's something, am I making a decision emotionally, or is what I'm doing driven by the data and it's numerical? That's our final check for ourselves. So this decision tree, does it go on now? This decision tree is, like I said, the one that I use in my head over and over every single month to really pinpoint in on, is there someplace in my business that I need to fix? And I can tell you honestly, there is always almost some area that I need to fix, because this isn't a fix it once and now you're good and you're golden for the rest of your business. This is an iterative process. You're constantly gathering the data, looking at what insight it gives you, deciding on an action you need to take, evaluating that, and then doing it again and again and again. And that's how businesses stay healthy, because you're in front of that. You're getting in front of these decisions, in front of the problems before they happen. You're identifying them right at the source when it's occurring in real time so that you can fix it. That's the beauty of being able to take everything that we have done in these last 10 weeks to create a profit and loss and create a balance sheet, and then actually have 4 high-level decision points to pinpoint what's wrong in your business time and time and time again. There are so many people not doing this. And it blows my mind that there's so many people not doing this, because they're not taught how. We come to Whatnot because we love selling what we love to sell. We don't come to Whatnot because we're financial, accounting geniuses, right? We come because we like to do what we're doing. Just understanding how to take that P&L. If you are already using a QuickBooks, a Reseller Genie, or one of these other softwares that it'll produce a profit and loss and a balance sheet for you, start with that. Every month, pull your profit and loss and pull your balance sheet, and then go through these 4 questions. Go through these 4 high-level questions, and you will start to pinpoint the areas of your financial business that you need to focus on and fix. And again, we start with the financial. The financial has fingers on everything else that's going on in your business: how you're sourcing, how you're selling, what your product mix is, what your shipping costs are. The financials are up here, and these are your statements, and they have fingers that touch everything else. So if you identify up here at the hand level of what's wrong, and then you know which finger that you need to fix, where to follow it down to pinpoint the problem in your business. It's amazing how this works. And I tell people this over and over, and the ones that take that advice and they listen to it, they come back and they say, this is changing how my business works. They can find the problems immediately. And the ones that don't continue to have the same problems over and over. Cash continues to be tight. They have inventory piling up on their shelves. So I'm not just saying this to talk, just to hear myself talk. It's actual business truth. So that's pretty much kind of the whole thing for tonight. We do have some, at the end of every workbook, we have some, end of every chapter, some CEO check-in questions. I'm just going to run through them very quickly. These are some questions you can start thinking about to get a higher level dig into your business. When taking a trip to source, what can be used for a write-off? No, not off topic at all. Feel free to ask questions at any time. So for anything that is tax deductible or is a legitimate business expense for your accounting purposes would be your mileage. So you keep track of your mileage. Last year was 70 cents. This year, what are we up to? 72 and a half, I think, for 26. I have to go and look. It's been a while since I looked at this year's. I'm still kind of stuck in last year's tax brain. So keep your mileage, and that's pretty much it for a day-to-day sourcing. Obviously, the cost of the goods that you buy. So what you buy to source is deductible. Meals while you're sourcing is not deductible. If you're taking a multi-day sourcing trip, and it truly is a business sourcing trip, your travel expenses, besides your mileage, your hotel, if you're paying hotel, if you have to fly to a place to source, something like that, if you have to rent a car, all of that would be deductible. Is 72.5, thank you. 2026 is 72.5 cents for every mile driven. Meals are deductible at 50% of the rate if you're taking a multi-day business trip to source. Now, if you're just leaving your house and you're going to go hit 3 or 4 antique stores and then come home and you have lunch in the middle of the day, that's not a deductible expense. The lunch isn't. The mileage is, though. I'm trying to think, that's pretty much all that you can deduct at that point for that. I mean, you always have your cell phone. Portions of your cell phone would be tax deductible. Hopefully that answered that question for you. Feel free, you guys, if you have any other questions, I'm happy to answer them. Some of the CEO, like kind of higher level thinking for you guys, when you're doing a monthly review, you're very welcome. When you're doing a monthly review, look and ask yourself, do I currently use my numbers or am I just recording them? The majority of people, if are either just recording them and never using them to make these decisions, if they record them at all. At what point do you think you should start an LLC? Oh, Chrissy, you have asked my soapbox question. That depends. I'm going to give you the perfect accounting answer. Hold on, I'm going to go back to, isn't the meal deductible if you're a certain amount of miles away from home, even if it's not an overnight trip? It could be, but that gets really tricky. And typically you're not really that many miles away from home where it would be deductible. It's safer to say that it's not, your lunches are not deductible, because it's in very certain circumstances. All right, the LLC question. Number one answer, you do not have to have an LLC to do this business. I am a CPA. I've been on Whatnot for 2.5 years. I've been reselling for many, many years, and I do not have an LLC. It is absolutely not necessary in every case. There are legitimate reasons why to have an LLC and legitimate reasons why not to have an LLC. I always suggest that you check with a CPA and a financial advisor, possibly an attorney. Most of them will do free consultations for you. Here are some of the questions they will ask you about your business to help determine if an LLC is correct for you. What are your assets? So what does the business own? What do you own personally? So they're going to look at what kind of assets would be underneath an LLC's name. What type of assets are you trying to protect? Because I can guarantee you probably heard at one point, create an LLC so nobody can sue you and take your house. It's the most missed piece of information, misused line out there. But they will ask you what your assets are. They're going to ask you for your financials. How much money are you making? How much money do you plan? They're going to ask for projections. How much money do you plan to make? What does the growth of your company, what is it projected to be? They're going to ask if you have employees or if you plan to have employees. They're going to ask if you are by yourself, if you work with a spouse, if you have other unrelated partners. If so, how many partners? Do you have them now? Do you plan to have them in the future? They will ask questions about the type of products you sell. Is the business you are conducting a highly litigated business? Is your business one that is going to get sued a lot? Are you doing something that opens yourself up to being sued? Could we donate old inventory and use that as I will answer that question in just a second, Cajun. So those are some of the questions they're going to ask you. So they're going to ask you all about your financial history and moving forward. Depending on those questions, then they would recommend either yes or no to get an LLC. It is not a clear cut. You need an LLC. Do not let anybody tell you that there are special tax deductions for an LLC, because they are flat out liars. I am here to tell you they are lying to your face. There is no special tax deductions for LLC. Guess what? You as a sole proprietor and you as a single member LLC, fill out the exact same tax form and apply the exact same tax laws. There is nothing special about it. So when you hear people say, oh, you get an LLC to protect your house so nobody can sue your house, that's halfway true. It's only true to the extent that if you were to be sued as a sole proprietor, could they go after your bank account? Could they go after your house? Yes. What's the likelihood of them getting sued? What's the value of those things? Do you even own a home? So there's some questions in there. If you have an LLC, which this is the part that a million people miss with their LLCs, because all they see is this big shiny LLC and they don't understand the implications, is when you have an LLC, you create a whole separate legal entity. You have you over here, You have your LLC over here, a whole separate legal entity, okay? You have this entity. Over the top of it, like my hands, represent the corporate veil, okay? That means your LLC is sitting underneath this corporate veil. That corporate veil is supposed to protect your LLC, protect you, separate you from that LLC and anything bad coming out of that and getting to you. The problem lies in most people, your name's not attached, correct. However, I'm going to talk about that too. Most people don't realize that if they don't completely separate all their business and personal finances, if they don't file the proper paperwork, there are so many easy ways to pierce a hole in that veil. And the minute you step out of bounds, the minute you do something wrong with that LLC, any good lawyer can attack it and take your house anyways. If my daughter and I are doing what not sales together, should we have an LLC since we have shared expenses and income? Chrissy, that would be one of those instances that it may make sense. Again, you have to look at all the other variables. That could be one where it may make sense. Why? The reason why it may make sense in that case is you would create an LLC. Now that also, in this instance, you have two partners that file separate tax returns. So you have two individual partners coming together to create an LLC. Now you also, in addition to filing your personal tax return, you have to file a Form 1065. It's an LLC tax return. So you're going to be paying $300 to $800 if you're not doing it yourself for somebody to do that LLC tax return. However, that tax return will then divide the profits and the expenses based on your LLC agreement amongst you and your daughter, that then each of you claim the amount of income and expenses on your own tax returns. That is a case where it may make sense. Because otherwise, one of you, whoever's name's attached to whatnot, is going to incur all of the tax liability for that. Let me go back. There was a question, your name's not attached, and then there was another one we were going to ask. Old inventory. So we're about to hit the old inventory question. The thing with your name not being attached, if you are a sole single member LLC and you go to rent commercial property or do a lot of other legal things, they are going to want you personally to secure it, because they know that that single member LLC really doesn't mean a whole lot. So you go to rent any commercial property, you're going to have to give a personal guarantee anyways. So it's almost defeating the purpose. Okay, the inventory, yes and no. So let's think about how inventory works and how you donate old inventory. When I get inventory, I take cash out of my business bank, I give it to somebody, and in exchange, I get inventory. I've traded one asset for another. Inventory is an asset sitting on my books. It represents an expense eventually. If that inventory never sells, I made a bad buy, it doesn't sell, and I decide to donate it. The accounting for that is, I give it to Goodwill, it's gone, it's out my door. I take it out of my cost of goods at whatever I paid for it, and I move it down into basically into your cost of goods. You have a sub account in your cost of goods called obsolete inventory, and you recognize the expense at that point. There's no charitable donation like write-off for that. It's you are recognizing the expense you paid for the inventory on your tax return, your Schedule C. Now, let's say you didn't pay for that inventory. You're a single member, you're just you, sole proprietor. You didn't pay for the inventory. You know, your sister gave you a bunch of stuff, or you cleaned out your closet. You had no value on that inventory. It was zero cost of goods. If it is zero cost of goods, there's nothing to pull out of cost of goods because you didn't pay anything. So there's no expense. At that point, it becomes a charitable donation on your personal tax return. So it depends on, is it an asset on your books or is it not an asset on your books? Hopefully that answered that question. All right. Oh, my screen just went black. I don't know why. So one of the, I wasn't thinking when I went to Austin for Seller Summit and used miles and points for airfare and hotel, is the value of any of it deductible? Oh, you're getting into some tricky stuff there. I'm assuming that your points were accumulated from personal use, like over a certain period of time, that you've accumulated this from travels that you have done that possibly weren't business. Yeah. That's a hard one. Because there is no cash outflow for you, there would not be any tax deductibility there. Now, there may be some slight rules to get around that. That gets really tricky. I'd have to go do some research. But right on the surface of that, if there was no cash outflow for you, immediately it does not say tax deductibility to me. That's a little trickier one. Auntie Barbie, I will see what I can find out and see if I can email you anything that might help you in discussions with your tax preparer. So let me see what I can find out. Again, that's such a unique case, but I'm thinking right off the bat, no, because there's no cash outflow. But I'll see what I can find out. So some of the other stuff you might want to look at, just kind of high level, which financial report influence your decisions the most? Right now in your business, are you more concerned about your assets and your debt and what you own, like what's left in your business, or about your revenue and your expenses? For me personally, they're both important, but I lean more heavily on a month-to-month basis for my profit and loss. And my balance sheet is more I use for longer term planning. So that's how I use them more so in my reselling business. Every business is going to be a little bit different. Another question you might want to ask yourself, where do emotions still override my data? What am I doing where I'm using how I'm feeling to guide my decision process instead of using what the data is telling me? Some areas, if you find yourself doing this, these are the places you may find it. When you're discounting, we talk a lot about emotional discounting, panic discounting. We see a lot of newer sellers doing this. When maybe you're brand new, you're not making a lot of sales, and you show something and you've shown that item 3 times, and you're finally like the 4th time, you're like, you know what, I've been showing you it for $10. I'm going to give it to you for $5, because you're like, okay, if I cut the price, maybe somebody will bid. It's this, I feel this pressure to do something. That's emotional discounting. So that's something you may want to look at. When we're pricing, sometimes we have too much of a connection to something. People say, sell what you love. I don't necessarily agree with that. Because if I'm only selling what I love, I will put a higher value on something than what objectively people and whatnot may put on it. And I may want to pull in more money for that item. I may overprice it because I'm emotionally invested in an item. So I don't always say sell what you love. I say sell what you can get excited about. And if it's the ultimate profit that you get excited about, wonderful. I don't necessarily love all the different decor styles of vintage decor that I sell, but I can get excited about it because I know that there's people that I've made friends with that love it, and they're going to be excited to see it. Tony would be upset if you had to sell me. Hard question. How much capital should I have before I start selling on Whatnot doing random items? So I can't give you an exact amount, but as a CPA, here's what I would recommend. Project a cash flow, okay, to the best of your ability. It's going to be complete guesses to you. Cash flows, you're going to start out, you're going to look at what month are we in? We're in May. Let's just say if you were to start selling June 1st, be very conservative. If you were to do 1 show a week and every show you had 100 items, let's say you conservatively, you would expect to sell 20 items at $10 an item. Like, be very, very conservative. Think about how you're pricing items, so think kind of through, if you had 100 items, very conservatively, what might you expect, okay? And go as low, but make it as low as you can. Like, be very, very conservative. That way, if you happen to sell 50 or 80, that's great. That's just the cherry on top. So do that, figure out how many shows and be very conservative in how much you think you're going to sell. Now you know your income. You got your income planned out. Take a blank calendar and literally write this out. You have your income. Then think about what expenses do you have. You got to buy shipping supplies. If you haven't already sourced, do you have to do more sourcing to replace the items you expect to sell? Do you have any subscriptions? Write all of those in on where in that calendar you're going to be spending that money and how much you estimate it to be. This isn't going to be perfect. This is going to be a lot of just good guesswork on your part. Don't worry, you'll make it better. And then add it all up. How much is the revenue? How much is the expenses? Hopefully that you can think you're going to have more revenue than expenses. So figure out, how much do you need? How much money do you need to survive for a month? I would multiply that by 3 or 4. That would be just me. I would have a little cushion. That may just be a few $1,000s. That may be a couple $100s. That's how I would attack it as a CPA. Now, I know a lot of people come to Whatnot and they're like, I don't have much money. I've got $100 in my bank, but I got a bunch of clothes in my closet and I'm going to sell them. Okay, it's a start. It's better than nothing. It makes me very nervous to have zero cash cushion. I always suggest trying to build up a cash cushion ahead of time. And I would do so by estimating how much money do I need for a month, and then maybe getting at least 2 months of that. Does Whatnot work with QuickBooks? It does. And to track your P&L, or do I have to input for my bookkeeping purposes, or a program you recommend? Whatnot does integrate with QuickBooks, and so does My Reseller Genie. Both of those integrate, so you can we'll just transfer in or the information. I don't necessarily recommend anything. As a CPA, I say always do what works for you. If you're a techie person, go with one of these techie options. If you are like, look, I don't like all of that, I like pencil and paper, go with pencil and paper. Consistency beats perfection. Use what you're comfortable with and what you will actually use on a regular basis, like at least once a week. That's what I would suggest. That to me is better than any type of perfection, is being consistent in something that you will use. Someone said if something is worth 150 on Whatnot, you might get 50. Yeah, that's very true, Cream City Rollers. Whatnot is its own market. Whatnot's not eBay. Whatnot is not Etsy or Poshmark or any of these other sites. It's its own market. It cracks me up when I see sellers saying, well, look at the comp on eBay says it's this. Yeah, so what? Then go to eBay and buy it. Like, it doesn't matter what these outside sources are. This is why me as a seller I love dollar starts. Why do I love dollar starts? I don't have to figure out the value. It takes all my emotion out of it. I have zero emotion because I'm going to start it at $1 no matter what it is. And you, as the buyers, get to determine the value it is to you. I did something in one of my shows the other day. I had a cup, I can do this. I can hold this Yeti cup up right here, and I can ask all 20 of you, how much would you pay for this? We're going to get answers all over the board. Some people would pay $5, other people may pay 20. So who am I then to come and assign a price to something? Because I'm either going to be overpriced for some people or underpriced for others. I would rather just say, you tell me how much you're going to pay for this. I'm going to put it up there for $1 and let the market in itself decide. And Whatnot's market is, to me, drastically lower than some of these other markets. Why? You're trying to, first of all, it's an auction site. The whole concept of auctions is getting something at a deal. It's getting something at a value. If you go and you look at HighBid or you look at some of these other auction sites, most of those auction sites are starting at $1 or $5 starting bids for nice items. Some of them have higher reserve prices, but there's a good majority on all these auction sites I go to, most of them start at $1. But you need numbers in the room to do dollar starts or you will get cooked. To some extent, yes, you only need 2 people to bid. I'm going to be perfectly honest with my dollar start journey. The first time I ever did dollar starts, and I've tried it all. In my 2.5 years, I have tried it all. I can give you statistics and data on all of it. When I first started dollar starts, it took me about 2 months to start making a profit. It was crazy. It was a lot of $1, $2, $3 starts. I lost money for a good 2 months, which was about 10 shows or so at that point. And then it started picking up. Then I did dollar starts and free shipping, and it went through the roof. Things were getting bid up. I was paying more in shipping, but it was the highest grossing shows I had ever had in my life on Whatnot, doing dollar starts and free shipping. Even paying the free shipping, I was still making a lot of money. Then I've done a bunch of different things, but I say that saying I don't generally have 100 people in my room. My selling shows, I'm averaging 40 to 60 people. To some of you, that may seem like a lot, but I am not the $200 room, $400 people size rooms. I have 40 to 60 people. And when I was first doing dollar starts, it wasn't that many. It was 20 to 30 people, tops. Dollar starts will bring people in your room. Now, if you're brand new, absolutely do not do dollar starts for your first shows. Unless you have a cushion, don't do dollar starts for your first shows. I would never recommend it for a brand new person. Get your footing, understand what the market is, do some shows, figure out the supply and demand, figure out what your customers want, figure out what's selling. Every single one of you after a show should be taking a few minutes and thinking through your inventory, which flew off the shelf, what had the highest bid prices, which one had bidding wars, and which one sat there. That's data that tells you what you need to keep buying and what you don't need to buy. So figure all that out first, get the right product, get your show down. How do you run a show? Figure out how to do that before you ever start thinking about doing dollar starts. Then when you do start thinking about dollar starts, don't do all of them at once. Don't do a full show of dollar starts. Hit or miss. Pick out a handful of items. Do it when somebody raids you. Practice it a little bit. Get a feel for it. Feel the room out and grow from there. Shipping scares me, afraid that's where I'm going to lose. So one thing I highly recommend, Cajun, I don't know if you came over from I Love Discounts, their raid. I Love Discounts every Monday at 5 p.m. now is doing nothing but a shipping show. They're good, honest sellers. You can totally trust the information they give you. And their whole shows are going to be focused on shipping. And Lysandra will answer any question you throw at her on shipping. I suggest definitely checking them out. It is, would you tag I Love Discounts and put shipping next to them? Chrissy's right there. They help me so much. They're some of our best friends on Whatnot. They are really good people and will answer your questions. There's nothing for shipping. If you are brand new, and this is something I also say all the time, if you are brand new for shipping, use the Whatnot system. The Whatnot system is actually really, really good. They are wonderful people. The Whatnot shipping system is good. Weigh your items in the way that you would ship them. So the box and whatever packing that you would need to keep that item safe. Weigh that, assign that weight to the item when you list the item. Or if you're doing randoms, have different weight codes. So make sure it's weighed appropriately on the front end. Everything should be okay on the back end. It will bundle. Whatnot has a very good bundling system. If you do that and buyer pays all, you should be okay. Once you understand that, get a few shows under your belt, really understand the shipping system, then you can start to evaluate, okay, if I want to do max 921 shipping, based on the data I have on these shows, how much would that cost me? Could I do 921? Can I do $9? Can I do $8? So once you have some shows under your belt, you can start to figure out then, can I do reduced shipping, which would be the next move. If I had to pick between reduced shipping and dollar starts, and me and Crystal had this, Crystal's Vintage had this conversation at one point, I would do reduced shipping first and start sprinkling in dollar starts or low starts. I would always go for doing a reduced shipping well before I would do the lower prices, if you're trying to find the right mix. Reduced shipping is going to be huge, but don't let it scare you. They have a good system. Go to shows like I Love Discounts, ask questions, go to the Whatnot, help.whatnot.com, read everything they have. They have really good information there. And don't listen, I'm going to say it, hold on. My husband's like, be careful what you're saying. Don't listen to everybody saying, do this custom profile and do this and set up this and do this trick and I do this trick. Forget about the tricks, the shortcuts. Forget about all of that when you were brand new. When you were brand new, use the system the way it's set up, learn it for yourself, and then take it to the next level on how can I do it different to maximize that more for me. That's honestly your best bet. All right, if there's no other questions, I think we're going to go raid pretty soon. I want to see, did I have any more CEO type questions you should think about? Oh, here's a good one. Here's one thing. And I would love to hear your guys' answers on this. And I'll tell you what mine is. What is one metric that you look at on a regular basis? After every show, what is one metric that you are focused on? And the reason I ask you this, what you focus on and what you measure changes and improves. We just went through this with my CEO challenge where they had to pick a metric, and every single one of them, the metric they picked, they monitored that metric for 5 weeks and they all improved. They improved more than some of them thought they would improve. What you focus on, what you measure and monitor improves. What's your metric that after every show is something you look at? And if you don't have one, find one. Find a metric. Mine is my average order value. I am very focused on my average order value right now. Customer number in your shows, perfect. And it doesn't always have to be a financial number. There's a reason why you pick. So Sheila is followers. Okay, so Sheila, you're trying to get your followers. Can I ask you, Sheila, why is it that it's followers? Not that it's bad, I'm just curious. How many customers and average sell-through or average sales or average order value? Some of you may look at your sell-through rate. That's how many items you show versus how many items actually sell. So if you show 100 items and you sell 70, you have a 70% sell-through rate. What type of jewelry is selling more? Perfect. So you're looking at that data on what to buy more of, what not to buy. You're looking at what the demand is. What do the customers want? New and repeat buyers, so important. Your repeat buyers, take care of them. They are forming your base. Those are what are going to carry you through any hard times you have on Whatnot. Trying to build a following, hoping to get people to participate in the show. I would recommend, followers are great to have, but they're not the end all be all. People are going to tell you, and people are going to get the impression, I need to get a lot of followers, because you see on Whatnot, the 5K follower celebration, the 10K follower celebration. And I'm not too concerned about followers. To me, followers are a very leftover thought process from eBay, Poshmark, Facebook, Instagram, YouTube, that followers, that number determines success and determines like when you can be monetized and things like that. Whatnot is almost completely different. If you are doing really good shows and you have a good product, you don't even have to worry about the followers. They will happen organically. Cream City Rollers, followers don't equal sales. I would focus more on who said it up here that they were focused on their new and repeat buyers. Here it is, Tramelto. I would focus on new and repeat buyers. Pour your energy into those people. Pour your energy into, particularly into your repeat buyers. Don't ignore your new ones. They're just as important. You got to keep a pipeline. But pour your energy into them. You're going to see growth like you wouldn't believe if you're focused on the buyers. Do things that are buyer-centric, that you're focused on what can you do for them, removing any barrier to helping people buy. And that follower number is just going to grow without you thinking about it. We also figure out what our particular buyers bought so we can get perfect. I love that, Chrissy. That is using the data that your show is giving you. Every one of us, take 5 minutes after your show, think about what sold, what didn't, what had a lot of bids, what had bidding wars, what went for the highest prices. I'll give you a little secret how I do mine. I'm going to tell you exactly how I get that data in an instant. I've been pre-listing, okay? In my shows, I'll start off with 2 or 3 items that aren't pre-listed. I have my items in order. I go in order. They're in order for a reason. We have mid-range warm-up items. We have bigger items, and then we have a cool down. There is a show flow. There is a experience in one of my shows, and there's a particular order that I lay my products out in. I start with my warm-up items, right? Then I move to pre-bids, and I may start a show with 2 pre-bids. The people in your room catch on very quickly. And I tell them, I'm verbally saying, I'm moving to pre-bids. After 3 or 4 items, I'm moving to pre-bids. I start the pre-bids. Even if I only have 2 or 3, all of a sudden, just like magic, boom, 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 that pre-bid list just starts hitting and hitting and hitting, and more pre-bids are coming up and more pre-bids are coming up. And I focus on those pre-bids in the order that I have them listed in, okay? Because again, I put them in order for a purpose. Focus on all the pre-bids. Guess what? Before I know it, the show's just about done. At the end of that, I may have 3 or 4 items that didn't have any pre-bids that are still sitting there. You know what that tells me instantly? I'm still running them. I'm still going to do it. But instantly, that has just given me the market data I need to know on what sells and what doesn't sell. That the 3 or 4 that's left, those are always the items that it's in my head like, okay, maybe you need to buy more of these ones that had a lot of pre-bids and less of these. It is one of the easiest ways to get market data from your shows. And I know we got a little off topic there, but it works wonderfully to give you that type of information. Now, I also don't run hundreds of items. That advice I'm giving you is based on how I run a show. If you're running hundreds of items, that may be a little more difficult to do it that way. I run 50 to 80 items. I'm leaning more towards, I used to do 80 to 100. I'm trying to get down closer to 50 items a show of very high quality items. Speaking of that, I am going to do a selfish plug, and I love discounts. I see your comment. I'm going to touch on that. I am going to do a selfish plug. This coming up Saturday is my Bougie for a Buck. I'm a very verbal proponent of dollar starts, and I am doing all my shows are dollar starts, but I have brought out the bougiest of bougie items, fairy lamps, hens on the nest, swung vases, really high-end items, vintage decor items, and they're all listed for $1. I also have some that are not listed. That'll be surprises during the show. But if you are interested in anything like that, check out my show. Go ahead and put your pre-bids in. We already got people in there starting to pre-bid. But all dollar starts on very high-end items. So that's myself, shameless plug for myself tonight. I Love Discount says we watch video. Oh, it keeps moving. We watch video receipts on our random polls that were bid up the most. So there you go. So I Love Discounts. Even if you're not pre-listing, they've just given you a way to get your same market data without pre-listing. I love discounts. I love discounts. It's so funny. I'm going to give you a hard time. So we're kind of off topic here. We're just rambling for a little bit before we close for the night. Myself and I Love Discounts, we hung out together in Indiana one time. We met up with this guy selling glass out of a storage unit. Long story, it was kind of weird at first. We were like, they said like puppies and candy in the van, and we were like right there at the storage unit waiting. But we got to do a private pick on glass, and almost all the glass I bought that night is in the Bougie for a Buck show, and I Love Discounts has bid on almost every single piece of glass. And you know what? Here, I'm going to be completely honest. I'm doing all dollar starts. I'm going to have about 25, 30 items. Some of them are starting to get bid up. I'm pretty sure some are going to go for some great prices. There's a good chance that some of those are not going to get bid up very high. There's a good chance I'm going to lose some money on some of them items. Very good chance. So y'all, there is a high probability that you can get a really good deal on these. Now, do I think all of them are going to go super cheap? No. But I have about 30 high value items that are sitting there starting at $1. Who knows what's going to happen? I even pre-bid on the vase that you bought from. Oh my gosh. You're going to buy back the vase. Thank you so much, Gage. And please come back, you guys. Tonight was really the accounting focused one. We have 2 more weeks of this. So next week, we're going to be talking about, we only have 2 more of these Monday night shows. Next week, we're going to be talking about accounting systems and rhythm. So consistency over chaos. That's next week's topic. But I do chat shows. We do a chat and sell every Monday, Wednesday at 7 a.m. And then I do a business show every Friday at 7 a.m. For 2 hours. We talk about a pre-designated business topic. I have a 52-week schedule I go by. And then on Friday evenings, I do solely tax at 7 p.m., a pure tax show. So please feel free to bookmark any of those and come see me and ask questions at any time. And with that, we're going to go and raid. Thank you guys all for hanging out with me on this Monday night. I know accounting is not always the best Monday night topic. My husband always reminds me, he's like, look, people just got off work. It's Monday night. Do you think they want to do accounting? I'm like, this is my only free night to do it. So this is when we do it. We're going to go raid Inga, I think. So hang out. She's pretty amazing and she's beautiful. She's just gorgeous. I'm so jealous of her, but in a good way. All right. We're going to go raid. Bye, everybody. You turn it on, I can't.
On TikTok. We've got cinema video.